Welcome, dear traders. Germany's inflation data published yesterday came as an unpleasant surprise for traders. Energy and food prices are soaring, hitting to new highs. Inflation is growing at the fastest pace in the last 40 or 50 years. The ECB has to take more decisive steps now to curb inflation. Investors are currently revising their portfolios to avoid losses. And let's see what sentiment prevailed in the Asian session on the last day of spring. Yesterday, U.S. trading floors were closed on the occasion of a Memorial Day, so the U.S. stock market has kicked off the trading week today. Will investors be able to cement last Friday's rally? Given that one of the main drivers for a reversal was the report on the slowdown in inflation, then Friday's rally could have been resumed on Tuesday as well. However, as we know, market sentiment can change rather quickly. Today, futures for U.S. main stock indexes are trading mixed. The NASDAQ and the S&P 500 indexes showed modest gains, while the Dow Jones and the Nikkei declined. Perhaps risk sentiment will rise again as Shanghai has announced an end to its 2-month long lockdown. Asian stocks are trading mixed today also because of Germany's inflation data revealed on Monday. Consumer prices in Germany accelerated at a faster than expected pace in May to reach their highest level in nearly half a century. This data renewed market fears and uncertainty. It seems that the ECB has to raise the key rate more aggressively in July to cap galloping inflation. The hawkish statements of Fed policymakers Christopher Waller also added fuel to the fire. He said that the interest rate should be raised by 50 basis points at every meeting until inflation drops significantly. So, the recent rumors about a pause in the Fed's tightening cycle after rate hikes in June and July look less real. Taking into account such unprecedented inflation figures worldwide, it's extremely difficult to remain an optimist. While stocks are trading mixed amid waning optimism, the US dollar index fell overnight to a 5-week low of 101.29. Demand for the greenback as a safe haven asset weakened after reports that Shanghai eased coronavirus restrictions. Besides, risk appetite increased as well. However, investors' concerns about economic expansion facilitate the growth of the US dollar and Treasury notes. As a reminder, the US index dollar measures the strength of the US currency versus its 6 major rivals, especially the euro. Today is a bad day for the European currency. It retreated significantly against the US dollar. The latter was able to regain momentum after a 2-week losing streak. Today, the US dollar was somewhat unsteady due to renewed market fears about the current economic and geopolitical situation. It was moving in the intraday range of 101.41 to 101.78. At the time of making this video, it has already approached 101.78. The greenback was also up against the yen. Like the euro, the Japanese currency was losing steam. Nevertheless, the yen notched the best performance in May since July 2021, given that the steady rise of the national currency is undesirable for Japan. It appears that this means the country has faced some serious problems. Industrial production in Japan contracted to minus 1.3% from plus 0.3%. On an annual basis, the figure downled even more to minus 4.8% from minus 1.7%. The world's largest automaker, Toyota, cut production volumes by more than 9% in April. Meanwhile, retail sales in Japan rose sharply by almost plus 3% in April. Apparently, the Bank of Japan's dovish policy has not helped the government avoid certain problems. The stronger yen has only added more problems. In the Asian session, the yen decreased against the US dollar. At the time of preparing material for this video, the dollar-yen pair reached 127.94. The yen also was consolidating within the intraday range of 127.50 to 128.34. In Australia, the results of April and the whole quarter turned out to be very controversial. The country has experienced widespread flooding, the federal election, and the partial weakening of the Chinese market, its main trading partner. Inflation in the country in the first quarter climbed to 5.1%, a 20-year high. And the Reserve Bank of Australia has already raised the key rate by 25 basis points to 0.35%. And the regulator is widely expected to hike the cash rate once again next week. As for the Australian dollar, it was volatile in the Asian session. It managed to advance to 0.7197 versus the US dollar amid the risk sentiment and surging oil prices. However, investors became more cautious, fleeing back to the US currency. Therefore, in the Asian session, the AUD-USD pair was moving in the downward channel of 0.7163 to 0.7204, and it was trading at 0.7181. And that's all for now. Thanks for watching. Subscribe to our channel and leave the comments down below. See you soon.